we had identified three channels through which the COVID-19 outbreak was going to weigh on markets. So that's the slowdown in China, the slowdown from domestic outbreaks, let's say Korea and Italy, for example. And the third channel was financial market stress. And now we are starting to see significant financial market stress.
So you're seeing significant financial market stress, and what many people didn't see coming was this oil shock. So adding that into the picture, what now? Does this complicate the picture for those central banks who are trying to respond to financial concerns?
Absolutely. So with Russia and Saudi Arabia essentially pulling the rug from underneath the oil market, they are causing a huge policy challenge for emerging market central banks. So central banks across emerging markets are, on the one hand, facing huge sell-offs in their currency, and on the other hand, a slowdown in growth. So what do? Do they cut interest rates to stimulate growth? Or do they raise interest rates to support their currencies? And I think a lot of central banks are going to be squeezed by this policy dilemma now.
It's not easy, is it? Mandy?
Yeah, and as we've been discussing earlier on in the show, Cedric, part of the problem is that monetary policy doesn't have the potency that it used to have. And add on top of that, a number of central banks are starting to run out of bullets, full stop. Cedric, do you feel that the ingredients are starting to line up for the potential for a bear market in some of the major stock markets, such as the United States?
I think the risk is certainly there. So we're down, if you think about where the futures are trading now, we're about down 15 odd or 16 odd % from the high. And that means we're very close to a bear market. Now, if you look at corrections, they typically last, corrections of this magnitude, they typically last about 60 to 90 days. So I think, we're still going to see a lot of volatile trading over the coming weeks. But one thing that is very important to note is that even with a 20-odd % correction in global and US equities, you still have the S&P in its long-term uptrend. And the key level of support that we're really watching is 2,600 for the S&P. If it were to fall below that level, then all bets are off. And I think this could potentially signal a trend change in what has been a decade-long bull market.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.